Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I got to tell you, I'm pushing too hard with the trading. Too many losses, too much static in the thing. You know, it's a function of the changes in the trading plan that I made for this year, as opposed to the one that I had last year. Last year, I was still working on building up the consistency in going to higher and higher lot levels, trying to stay pretty much within the bounds of not chasing the pips, simply pouring more gas on the fire, so to speak. And that worked out really well till I got to the end of the year. And then there was a lot of volatility. I took advantage of that. I had a $30,000 a month right before the catastrophe hit, and took most of the earnings for the year. I still got left with certainly a good return on my money from the start of the year. But you know, kind of brought me to the point where I realized that I had made a couple of jumps just a little too fast. Again, it comes down to that when component. It's not so much what you know or how you go about applying what you know. It's when do you do that? When is it appropriate to do that? And so, again, I'm hampered. I guess I'm adversely affected by 40 years of real estate investing, which is, you know, it's a very fearful thing. I lost $1 million twice in my life due to economic collapse in the real estate market, and it took me 10 years each time to make that money back. I retired a millionaire, so everything worked out in the end for me, but it might not have, because of the time. I mean, that's why I moved into the currency markets, is because of that, those long-term time periods. So when I get to the point where I'm just trading 3 or 4 full lots, I can bang those out really well. As I get more up into trading at the 20 lot size, for example, and I've traded more than that, but getting up into there, all of a sudden my emotional state changes and I revert back into real estate risk management mode, and it's really totally different. So it's not something that you're going to face, I don't believe, particularly if I would work with you to get you through those stages where you learn at the lower lot levels and then you work your way up. You won't have the encumbrance, I guess, that I have from the real estate. And it isn't that the money is so great. It's money that you're going out on a daily basis that you're putting at risk, that you might put at risk buying a piece of real estate. You're doing that on a daily or at least a weekly basis, putting that at risk. So you have to change the whole timing thing. In real estate, I'm out here walking around in the yard because we're expecting a big snowstorm. You can see we're middle of January of 2023. We had 15 inches of snow. Up there is the snow depth chair. The snow was way up past the seat of that chair, and from a couple of really bad snowstorms. And then we got high temperatures, and the rains came, and then it's been fairly warm. But tonight they're projecting that we could get anywhere from 8 to 12 inches. Which, anyway, I'm out here making sure everything is okay. This whole area that I was in here by where the brook is, take you over by the brook. And you can even hear it. Water is still coming down from the snows that have melted up further up on the mountain, and then the rains. And so this whole area here was a flooded area. I think I showed a picture of that before. Yeah, I mean, we're looking at a pending snowstorm that could equate to what we had before, to 14.5 inches. So, you know, I'm used to dealing with a 14-inch thing of snow, and so we may only get 6 or 8. But I'm still preparing for the same thing. I shouldn't be out here freezing my ass. I don't have to do that. Because it's only going to be 6 to 8 inches of snow, but I'm out here anyway. And so that's a habit. It's a fear habit. You know, you look at the worst case scenario, and then you build for that. And so in a worst case scenario with real estate, where's my dog? There's Bo. Hey Bo, come on, we got to go in. It's cold. Freezing my ass off out here. Come on, let's go. And I hauled in. There's my wood pile. I hauled in several wheelbarrows of wood today. Get a little exercise. I had a cold for the last week or so, and so that's getting better, and so we'll be all set with that. Anyway, so in real estate, in your worst case scenario type thing, you hold for that long run. You know, it was a 10-year hold. I lose all that money. Well, okay, you just hold on. Don't panic. Don't sell. Just stay with it, and it'll come back eventually. And so there's the problem. As I'm starting to trade these larger lot sizes, this other risk management takes in, and I become oblivious to the losses because that's not what you do in real estate. You don't panic. You hold. Now, when I do that, most of the time in the currency market, because I have the experience, I'll get it to come around, and then I'll make my money. You know, sometimes I make a lot of money, and sometimes I just do a reasonable percent gain. Last year, it didn't come back, and I lost an enormous percentage of the money that I had made for the year. So this year, I'm really reanalyzing what happened at the end of last year. It's a learning process. And I think I've come to the conclusion, basically, that I'm really pushing too hard. You know, I've had a couple of videos recently where I've talked about you go through 3 stages in your currency life career. You first, after learning the process, learning the rules of the game, and how to be consistent in your trading, you just try to pay for your light bill or pay the food bill or something, make enough money to do that. And once you become consistent at being able to do that, then you step your game up a little bit, and you try to significantly increase the amount of money that you make to offset your job income, and ultimately to replace your job income so you can trade full time. Now those 2 stages can go together in 3 months. It just depends on how confident you are in the metrics that you're developing. Now I haven't done my metrics for last year yet, so I really don't know what my current win-to-loss ratio is, my average win value, my per trade expectation value, and the percent return against that average return. So I'm probably going to be doing that in the next couple of weeks as I get ready to do my taxes. And I wrote a computer program that scrapes all the crap off my transaction reports from my broker and produces the tax reports, puts everything into positions and what the position value was and all that stuff. So, and then it runs about 25 different metrics against it. So I'll have a better idea then. Not that I think that that's really important for me right now, because I don't think that's really changed as much. I think what's changed is I found that I'm starting to trade for more pips. And I've cautioned against that in this channel forever. You don't make more money trading for more pips. You simply have a larger bank and trade for the same number of pips. And that's what keeps your trading metrics about the same, so you have confidence in your trading. And so that if you run into a a period where you've lost 3 or 4 times in a row, you go, yeah, I'm a 60-40 trader, so I've lost my 4, so that maybe the next 6 trades or 5 trades will be good ones. And and that's the time where you say, oh, I'm going to push a little bit more money onto that trade because I'm in a statistical likelihood that I'll have winners because I've just had my 4 losers or whatever. I mean, it's just, you have to learn how to think like that. And I really didn't have that to the extent that it's necessary in trading. I didn't have that type of process, that win-to-loss ratio in real estate, because the time frames were so long. You either lose it all because you don't know what you're doing, or you ultimately make your money across the portfolio that you have. But you're not talking about a win-to-loss ratio. If you ask me what my win-to-loss ratio in real estate is, it would be 100%. Not only did I do real estate, but I was also a mortgage lender. I did a mortgage broking first, and then I was a mortgage lender. It was a high risk deal, but I was skilled at that. I understood the risk, real estate risk, and evaluating real estate. I never had a losing real estate deal that I did. I made money on them all. Well, I retired a millionaire because of it, so I guess I made some money. And I never lost any money doing mortgages. So I got 100% win-to-loss ratio. But I can't use that in my currency trading and say, oh, well, geez, I'm financially astute, so I'm going to win a lot. I'm going to win this currency. And that's the problem that I'm in right now. I'm not trying to pay my light bill, and I'm not trying to replace my job income, because I've already done that a couple of years in a row, so I don't have to worry about doing that. I'm in that stage where I'd like to try to make $1 million in currency trading. I made $1 million in real estate, so let's see if I can do that in currencies. And I don't think I'm quite ready to make that jump because I'm misinterpreting the when aspect to a very bad degree, and the holding periods, and letting some of these trades run so long. And the reason that I'm letting them run so long is because my profit targets, instead of being 20 to 30 pip profit targets and then scraping 15 pips or whatever on a position, or averaging out that, I'm extending those pip distance profit targets to 60, 100 pips. And you have to be willing to withstand, if you have 150, I think I have 150 pip profit target on this current trade that I'm in, and I'm way too heavy on it. And some of the retracements are running 300-400 pips, and I'm going, why am I sitting here with these 300 or 400 pip losses on these big things? This isn't a piece of real estate that's going to come back. And real estate isn't guaranteed to come back, any more so than the currencies are. But the currencies are even more likely not to come back, particularly when you're at the extreme boundary conditions of a pair. So it's necessary for me to change the way that I think about the risk management in trying to not only work toward $1 million goal, but the time frame that my expectation is that I can get to it. I have enough money in my account where it's reasonable for me to say, oh, in a very few short years, I can take that money at a very high percent return rate, because I think my win-to-loss ratio, when I finally get through all this crap and I finally get back to a consistent method of trading, will be really high. I mean, before I was trading about 70-30, 75-25 win-to-loss. And so I need to forget about the more pips to make more money, and concentrate on the rules as I know them to be valid for not only my ability level, but also what's reasonable to try to strive for. I guess what I'm saying is that although I have an understanding, and I teach this stuff to folks that will listen to me, is that you don't try to make 30 pips or 40 pips a day. You make 10 or 15 and you call it a day. That's a good day. 10%, 10 pips on $1,000 bank, that's $10. That's $1%. Where are you going to do that on a daily basis? You make 1% a day, you're not going to compound that and do that. But if you have a static $1,000 balance and you make $10 a day on that, and you're constantly reinvesting the $10 and you make 1% a day, you make a lot of money. The problem is when you get up to trading 20 lots, you're not going all in 20 lots and coming all out 20 lots. You can only do that if you're trading, 50 or 60 lots. Because it's proportional. You always want to have some dry powder to go in heavy. So I'm misinterpreting the timing on that because my real estate background is interfering with that. So I've sort of had to back off from that. I'm also was very adverse to taking a loss last year. And I was good enough and I had a high enough win-to-loss ratio that I only lost 3 times during the year until that one big loss at the end of the year that was just the mother of all losses. But up until then, I had only lost 3 times, and the total loss was $10,000 against, sometimes I'm trading a 6-figure account against that. And so if you take $10,000 and divide it by, let's just take $100,000, that's not very much to lose over the entire year. All I would have had to do last year not to lose all that money was simply to turn around and lose $10,000 or $20,000. I just had to pull the plug, and I didn't, because I was looking for the long run. And I forgot that it was the end of the year, and if I didn't take the losses, I would have to pay taxes against that, and I have a video out about that. And so everything is all screwed up with me right now in trying to make this transition from, I can make 6 figures a year just following these really simple basic rules. Instead, let's shoot the potatoes and try to go for $1 million. Well, I'm not quite ready for that because the timing difference is so different between what's needed in real estate as opposed to what's needed in currencies. I don't know whether I'll be able to shake that. And so I may have to go back and just trade a big account, but only trade small pieces of it, but up the number of times that I trade a day in order to generate more dollar income. That's really what I'm trying to do, is generate more dollar income. But I guess that's a long story for the title of the video, which was, I think I'm pushing it a little too hard. I should look at the way that I teach other people how to trade, because I wouldn't let them do some of the stuff that I'm doing. But again, I'm doing it for a different purpose, and I've got more money, and I'm in a different psychological and economic position than most of the folks that I'm working with. I'm trying to help 4 and low 5-figure account traders get on track so that they can develop the consistency and the confidence in their trading ability so that they can replace their job income. That's a relatively straightforward process, and I'm very capable of not only doing it but teaching it as well, because I'm an educator. I have 50 years of teaching martial arts, which is a very complex instructional process. I've got a degree in physics, almost a minor in math, 40 years in real estate, 33 years as a software engineer. I've got the background to do all this stuff. I'm very fortunate that I have that, so I can come on and say, I made $300 today or $1,000 today. But not only am I fortunate that I have that ability, but I have the ability to share that. And so that's why I have this video channel and have worked on a curriculum so that I can share with somebody. It's just that the person who comes to me to learn martial arts has a different mindset than a lot of the folks that are coming to me for advice about trading. I teach not the way a teacher in high school would teach you, and they have to speak correctly to you, and they can't tell you what to do, but they can say, okay, boys and girls, we're going to read 3 chapters and come in and we'll take this little quiz. That's not how I do it. This is the rule, follow the rule. If you don't follow the rule, I don't have time to work with you. It's that cut and dry, because your financial life is based on that, just like if I'm teaching a karate student, potentially their physical life hinges on the information that I provide for them. I look at this the same way in teaching trading. Your financial life is at stake, and my responsibility is provide you risk management. That's what it's all about. Not do what I do. I did what I teach. That's how I got to where I'm at. Okay? But once you get there, what are you going to do? You got a 6-figure account and you're going to trade to pay your light bill? I don't think so. That isn't the way of the trade. And so please understand that if you want to replace your job income or you want to trade for $1 million, there's no reason why those goals aren't reasonable. It's just, what do you need to know? How do you apply that? And more importantly than anything, when do you do that? And that's an experience thing that you only can get from a mentor, or you've got to do it like I did it and lose $40,000 when I initially started trading a large account in order to go, well, wait a minute, what's wrong here? Oh, it must be the education that I got because I'm trying to follow what all these people are trying to tell me. But they're wrong. I had to step back from that and figure out what was right. And as soon as I figured out what was right, I made 30% on my risk that first year. It should have been 60% because I took a bad hit. And then last year, I was 90% up on my risk, and then again I got scrambled up with my timing. But that's only because my end goal is different, and I'm making a mistake by trading for more lots than where the boundary conditions of my bank appear to look. Now, I've got a solution to that. Again, I've been still working on this computer simulation program as to how you build that position and where you can. It's okay to take a loss, but you don't want to lose 40% of what you made in the process of building the gain. And so there, I'm working on that. I have 5 variables that I'm trying to find the sweet spot for them so that I can get in an experiment. And I think that's probably one of the reasons I got jammed up this year so far, is because that analysis process is still ongoing. I'm still working on it now, and I got caught up experimenting with it. Boys and girls, don't experiment with a 6-figure account. Go back. You go back, trade a couple of mini lots, and see if it works. Jesus. Oh, my God. All right, well, I'm having too much fun, and I need another cup of coffee, and the wood stove needs another thing. There's a lot of stuff for me to do today. I hope you're not quite as busy as I am, and you can appreciate the beauty of the nature around you. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.